Welcome to TradeTheMBI.com. This is John's reports for the 25th. Well, Friday's action we saw where we were just back and forth. We had a little bit of weakness from the magenta. It still hasn't crossed below yellow and still above 33, so still maintaining that kind of sideways until we get the actual breakdown. We do have white leading, so as soon as that does, as soon as the magenta breaks below, we'll clearly be looking for a little bit more softness. At least to the 50% is at 39.21. We're at 39.80. That's a significant amount of range. And we're looking at cyan on the DOC, just about to move above midterm buyers in the green, so shorts will have overtaken that one as well. With the rising orange, we would expect a little bit more softness, at least from an ES standpoint. The NQ NASDAQ is a little bit stronger. As you can see, its magenta has stayed well above the 33 and above the yellow in a bit more of a plateau. So it's doing a little bit stronger action from that standpoint. And also, if you look at the DOC, also relatively strong comparative to the short interest. So I think that the NASDAQ, which has been the leader of this rally in the beginning, continues to be the same. So it's going to take a little bit of NASDAQ weakness, I think, before you would see any kind of fade back. Euro has reached sort of a safety spot here in the 102 range. Hasn't really dipped back below since the ECB instituted its effective bailout of Italy by having a special facility to buy Italian bonds. But secondarily, just the other day, and this is probably adding to the euro's strength, the EU changed some of their sanction rules regarding Russia, kind of softening the ability for outside parties to buy the oil. So it's kind of a capitulation, recognizing that they really are just in a crisis mode if they decided to continue with the explicit sanctions. So it's made it a little bit softer rules on the purchase and ways for companies to get around the most strident part of the sanctions. Are also allowing transport of goods through certain railways of separate Russian territory that is in Lithuania. And so you can see a little bit of softening from a EU standpoint. Also, we're not getting weapons being sent to Ukraine any longer, really, from the EU partners. So we could be seeing change as the realization that the economic war against Russia really has hurt the West more than it did anything to Russia. In fact, the ruble is still stronger than it's been. They're making more money than they ever have. Everything that they were hoping to achieve, it's done just the opposite. Gold pushing back a little bit, just at the 23%. We got white leading on that. It's going to be a little bit more difficult for gold to make a push right here, because you're starting to see the effects now of the economic slowdown as it starts to spread around the world. Everyone else, including the U.S., all reporting softer situations with the rising rates. The question really becomes how quickly that fade off is, and does it impact the Fed? And I think more and more the market is pretty assured that there's going to be the start of the recession, at least by the end of the year, if not first quarter of the following year. And so they expect that the tightening will reverse, and that will significantly change the outlook for stocks, at least from a valuation standpoint. We're looking at oil here right around 96, so it's considerably off that 118 range that we were at prior, and even the highs in the 120. So it's a 20% discount from it. How much you're going to see that reflected in prices? What it does is it at least stops the increase of goods from continuing that accelerated inflation. Inflation is still going to be high. It's just not going to be increasing at an exponential rate that it was. So there's plenty of news that indicates that while there's softness, if the Fed doesn't get crazy, you might be able to contain it and have it be absorbed. In which case, it's not guaranteed that things fall apart. But if they go with a 3/4 point rise again coming up here, I think that you might see a bit more negative reaction, because it could be too much too soon, much like Bernanke did when he raised rates consecutively after coming in from Greenspan, and that obviously led to the housing crisis that existed. We're already seeing cracks in the U.S. housing as, one, prices are starting to decline, number of people interested declining. So there's a lot of empirical information that things have, abated enough that if they don't go crazy, there's a case to be made on the bull side of things. From a TLT, again, the expectation that rates are not going to be increasing as it continues to rise here, and that's falling rates, but there's still a lot of people seeking safety from that. Bitcoin, again, barely over to the 22, had a nice little spurt, but again, with the higher rates and that, it's a little harder for it to find just free money to flow in. ETH moving back below that 1600 range, which was significant. And here it is from the daily. I'm going to show you intraday, but I just thought it would be worth looking at it because all the way from that 3,500 that we had this short, it was only until we just got those last few days finally turned to relative buy, and in fact that's starting to flip again. So we will see an additional run of softness in cryptocurrency. From a 50K standpoint, we were in clear short and literally pretty decent turnaround because once we get to the 50% at 39.75, we shot up above that, and that led to that magenta MBI readings here. Clearly well above 33, as well as the DOC green oversight, which is midterm buyers really outpacing shorts. So just plenty of long, and we talked about this at the beginning of the week, last week, that you had a lot of buybacks and just a bid that was already available, ready to be put into action. And I think that we've seen that this last week, that action taking place. Intraday, you can see here pre-market, nice bounce, positive extremes, and they begin right here at the 39.71, so that would be around 14-15 point decline from where we're at when those start to fill. But each of them from that point rising set for fill. Intraday, it's pretty clean. We had mostly weakness early on, and then it was that later part of the day that filled up, but the short signals that came through, all pretty clean. We finally got a little bit of a buy here, just under the 23%. Shakeout was improving pretty decent, but then we ended up with white MBI leading, and magenta faded, and that was the beginning of that next leg down. So there's still plenty of doubt in between. But overall, the action pretty clean from an algorithm standpoint. No objections whatsoever to exactly how it's playing out. We just got to continue to play each of those signals. Doesn't matter whether it's long or short. In this case, I think that a little bit of bias at this particular stage from that daily standpoint, and also the 50K is leaning towards some strength to start the week out. So, as always, though, I will keep you updated on Skype chat. Trade well. We'll talk to you later.